Investing in stocks is crucial for building long-term wealth and achieving financial independence. Stocks have historically provided higher returns compared to other investments, making them an effective way to grow your money over time. By investing, you gain partial ownership in companies, allowing you to benefit from their growth and profitability. Additionally, stocks help protect your wealth from inflation as their returns typically outpace rising costs. With the power of compounding, even small investments can grow significantly if given enough time. Whether you're saving for retirement, a major purchase, or simply aiming to secure your financial future, investing in stocks offers a practical and accessible path to reaching your goals. Hey there, smart investors. Welcome back to the channel. If you're looking to boost your investment portfolio, you clicked on the right video. Today, we're diving into the top 5 stocks you should consider, or at least I think you should consider adding to your watch list for 2025. From tech giants to emerging market players, I'll break down what makes these stocks stand out and why they could be your next big opportunity. So grab your notepad and let's get started. Starting with number 1, we have Apple. Apple remains a top-tier investment choice thanks to its iconic brand, diverse revenue sources, and reliable financial track record. The company's revenue is driven by its flagship hardware products like the iMac, iPhone, or even iPad. Services such as iCloud, Apple Music, and the App Store provide not only diversified income, but also a steady stream of recurring revenue, enhancing Apple's financial stability and fueling continued growth. Apple's success is deeply rooted in its commitment to innovation. The company's products stand out for their advanced technology and intuitive design, distinguishing them from competitors. Apple's agility in adapting to emerging trends like wearables, augmented reality, and sustainability strengthens its growth potential. The Apple Watch and AirPods actually dominate the wearables market, while the company's investment in AR signal its focus on future technologies. So whenever a new Apple product comes out, I'm sure you guys have seen the review videos on YouTube, and they get a lot of views, right? And because Apple is so innovative, they always have new features, and people love to look at new features, or at least review them. Whether if it's a tech channel or a review channel, people love watching those videos. And because those videos get so many views, those views eventually translate to customers. And Apple's not going to stop anytime soon. I mean, eventually when we don't need phones, maybe I won't be alive to see it, but we have some sort of microchip that allows us to make phone calls by making a weird facial expression. I don't know. Apple has been on an upward trajectory, and I don't see that company slowing down anytime soon. Additionally, Apple's pledge to become carbon neutral by 2030 aligns with the values of environmentally conscious consumers and investors, adding to its appeal. As one of the world's most recognizable and trusted brands, Apple enjoys a strong global presence. Its products transcend cultural boundaries, often serving as status symbols in developing markets. This broad appeal ensures consistent demand and positions the company to expand its market share in high-growth regions. And lastly, just to highlight the brand's strength, Apple has shown resilience in navigating global challenges such as supply chain disruptions and economic slowdowns. Its ability to sustain product demand, innovate in line with customer needs, and operate effectively in complex environments underscores its reputation as a forward-thinking and reliable company. If we actually take a look on TradingView, and let's go to when we had the pandemic, which was around March 2020. Okay, boom. So if we notice on TradingView, if we highlight this area, notice how price did start to push down, and most can say that Apple was on a downward trajectory. And let's go ahead and take off these candles and replace it with these lines. You'll notice that price was pushing down. But overall, after we had the pandemic, price never continued to push down. In fact, it broke this internal swing low and then had a nice break and retest at around this level when price was at around 68. And I wanted to show you guys this to prove that Apple doesn't really slow down during economic crisis. Yes, it did push down, but then it had a nice correction. And then if we fast forward, price has been on an upward trajectory ever since. Our next stock on the list is Microsoft. Microsoft Corporation stands out as a compelling investment due to its dominant market position, consistent financial performance, and forward-looking growth strategies. As a technology leader, Microsoft excels at adapting to industry shifts and consistently delivering value to shareholders. Microsoft's success lies in its highly diversified revenue streams. The company earns income from a broad range of segments, including software, hardware, cloud computing, and professional services. Flagship offerings such as Windows and Microsoft Office provide stable revenue, while emerging ventures in gaming and artificial intelligence open doors to new growth opportunities. This diversification helps shield Microsoft from market volatility by reducing dependence on any single product line. As I just mentioned, the company invests heavily in cutting-edge technologies such as artificial intelligence, machine learning, and quantum computing. Products like Microsoft Teams and the Power Platform exemplify its ability to deliver advanced, user-friendly solutions tailored to the evolving needs of businesses and consumers. Adaptability is another cornerstone of Microsoft's strength. From transitioning Office 365 to a subscription-based model to expanding aggressively into cloud and AI, the company has shown a consistent ability to identify and seize emerging opportunities. The next stock on our list is Tesla. Tesla has evolved from a niche electric vehicle maker into a global leader in innovation and sustainability. Beyond revolutionizing in the automotive industry, Tesla has made significant strides in the energy sector with its solar and energy storage solutions. While its stock history has seen volatility, Tesla continues to attract investors due to its robust financial performance, cutting-edge technology, dominant market position, and impressive growth potential. Tesla has shown remarkable financial growth over the past decade, transforming from a startup to a global powerhouse. Since its initial public offering, or IPO, in 2010, Tesla's stock has delivered impressive returns, outpacing many traditional automakers and other tech companies. One of the primary reasons for Tesla's attractiveness as an investment is its cutting-edge technology. Tesla has consistently led the charge in innovation, especially in the electric vehicle industry. And most recently, or I guess this isn't as recent, but Tesla came out with the Cybertruck. And this isn't great news. If we come to this website that I was researching on this morning, we have a lot of data that pretty much prompts the idea that investors weren't too excited with the release of the Cybertruck. And honestly, me either. I'm not a millionaire. I'm nowhere close to being a millionaire. But if I was, I would not be looking to invest into a car that looks like a garbage can, in my opinion. But let's just read some of the points here. So why Tesla Cybertrucks failed to impress investors. Tesla shares fell below pairing losses a day after it made the first deliveries of its Cybertruck. Investors were unimpressed as the company struggles to produce and deliver the Cybertrucks at scale. The Cybertrucks also cost a lot more than they were expected to at the time of the initial announcement in 2019. And lastly, the Cybertruck is unlikely to prove cash flow positive for at least 12 to 18 months, according to analysts. And honestly, I'm not surprised. Oftentimes when the announcement is made off of a predetermined factor, or in this case, a predetermined product that hasn't been tested yet, the hype usually is at a certain price, right? But of the release date, because the Cybertruck was much higher than expected, a lot of investors weren't really attracted to this new invention. And then down here, it's talking about how the Tesla shares fell as much as 3.4% on Friday, before paring back some of those losses a day after the automaker delivered the first units of its long-awaited Cybertruck. It cost more than it was supposed to be. So the pricing for the Cybertruck starts at $60K. Let's round it to $61K, including tax credits, which is almost double the $39 or $40K price tag that was touted when the vehicle was first announced in 2019. Wow. It's not going to make money for at least a while. High interest rates are a boon for income investing. Okay, so I'm going to leave the rest of this article in the description down below if you care to read more of it, but let's go ahead and move on. Tesla's focus on autonomous driving technology is another factor that makes it an attractive investment. As self-driving cars become a reality, Tesla is well positioned to dominate this emerging market with its autopilot system already in use on a larger scale. The integration of AI into Tesla's products and operations could unlock new revenue streams and improve efficiency. The next stock on our list is Nvidia. Nvidia Corporation has established itself as a leader in the technology sector, celebrated for its groundbreaking advancements in graphics processing units, better known as GPUs, and artificial intelligence. Once primarily known for its dominance in gaming, Nvidia has successfully expanded its reach into AI, data centers, cloud computing, and much more. So if you're into gaming like me, if you have a PC set up and you're waiting for GTA 6 to come out so you can start robbing banks again with your friends, there's a good chance that Nvidia is making all of that possible. Nvidia has experienced impressive revenue growth over the past decade, with a notable surge in revenue from $3.9 billion in 2015 to over 26 billion in 2024. This growth is largely attributed to the rise of GPUs in gaming, data centers, AI, and cryptocurrency mining. I said that with a little attitude only because recently I saw like a whole splurge of meme coins trending, right? And a lot of people are taking advantage of these GPUs to mine these meme coins, and some are making money doing it the legit way, if there is a legit way, but others are scamming people like the Hawk to a girl.
My Hawk meme coin is live!
Nvidia's technological innovations have set it apart from its competitors, allowing the company to lead multiple industries. From gaming to AI to data centers, Nvidia's products have revolutionized how industries operate. If you guys own a PC, you might have heard of this company, but GeForce and Quadro series GPUs dominate the gaming market, offering unparalleled performance. When I say unparalleled performance, I mean they're in no competition. Basically, they are dominating the gaming market, which is why a lot of people are starting to invest in PCs, whether to crypto mine, whether to game, whether to edit high quality videos. All that is possible because of Nvidia and the products it offers. In summary, the AI market is expected to grow exponentially in the coming years, and Nvidia's GPUs are the central to the development of AI technologies. It's important to understand that the global gaming market is expected to continue its strong growth trajectory, driven by mobile gaming, esports, and virtual reality. Nvidia's dominant position in the GPU market means the company will capture a significant share on this expanding market, particularly as the next generation consoles and high-performance gaming PCs continue to push demand for cutting-edge GPUs. I used to play the Wii, I used to play the PlayStation 2, I had PlayStation 3, my PlayStation 4 is literally across the room. All these games that are now being outdated is on my PC. And it's because Nvidia has these high performance GPUs that can handle all of that information. But these older consoles are starting to get outdated. This might be irrelevant to today's video, but it kind of has me thinking about in-store companies that offer games like GameStop. If a lot of people are starting to buy PCs and just purchase games online, what's the real purpose, or I guess what value does a disc hold? Who knows? Maybe that answer to that question might come sooner than I expect. And that brings us to our last stock on the list, which is Amazon. Amazon is one of the largest and most influential companies in the world. Originally founded in 1994 by Jeff Bezos as an online bookstore, Amazon has since evolved into the e-commerce and technology giant, with business interests spanning across cloud computing, artificial intelligence, logistics, and digital streaming. Amazon's revenue has grown exponentially over the years, from $7.98 billion in 2004 to over $500 billion in 2024. The company's ability to scale rapidly has made it a dominant player in multiple industries. Similar to most stocks on this list, Amazon's innovations in AI give it a competitive edge in both the consumer and enterprise markets, whether that be automated logistics, whether that be Alexa, like the Siri AI Alexa product, or even the automated suggestions for the average consumer. So whenever you hop on Amazon and they have products of your interest, that happens because of AI, right? And just like most of these stocks on this list, any type of company that has integrated AI or new AI is already above the competition. Amazon's fulfillment centers are increasingly reliant on automation and robotics, which help improve efficiency and reduce operating costs. The company's use of drones, automated warehouses, and advanced inventory management systems has set the standard for logistics operations and has helped Amazon deliver products to customers faster and, quite honestly, more efficiently. Amazon Prime is also another significant driver of growth, offering subscribers access to free shipping, video streaming, and exclusive content. Amazon continues to invest heavily in original content for its streaming platform, Prime Video, making it a direct competition to Netflix and other media companies. I'm not sure about you guys, but shows like Invincible, shows like The Boys, yeah, I'm there, baby. I'm nowhere to be seen on Netflix or any other media source. But in general, this creates a sticky customer base that generates recurring revenue and strengthens Amazon's position in the digital entertainment space. Amazon is literally the undisputed leader in global e-commerce. The company's online marketplace is vast, with millions of products available for purchase every day, and it continues to expand internationally. Amazon's customer-centric approach, vast product selection, competitive pricing, and fast delivery options have made it the go-to online shopping destination for consumers worldwide. There are several great apps for investing in stocks depending on your needs and preferences. Here are some popular ones that I have on this list. Feel free to do your own research, but these are the ones that are ideal for the average beginner. At number one, we have Robinhood. This is my go-to boy. I actually have a Robinhood account, which I use every day to look at stocks that I am investing in. But Robinhood is ideal for beginners due to its user-friendly interface and zero commission trades on stocks, ETFs, options, and cryptocurrencies. It's simple and it's easy to use, but it does offer fewer research tools compared to others. Next up on the list, we have E-Trade. E-Trade offers a wide range of investment options, including stocks, bonds, mutual funds, along with detailed research tools and educational resources. I personally never heard of this app until yesterday, or website, but I'll leave all these links down below in case you want to check them out. Next up, we have Webull. Webull offers commission-free stock, options, and ETF trading. It's known for its more advanced charting and analyst tools, making it a good option for intermediate investors. Now, I do have experience on Webull, and I can't say that it is pretty convenient because they do have a really good platform and it's very transparent. But because I use Robinhood, I tend to stay away from it because the stocks that are in Robinhood are also offered in Webull, but so far they are definitely my top two choices. Next up, we have Acorns. Acorns focuses on micro investing, automatically rounding up your purchases to the nearest dollar and investing the difference in a diversified portfolio. Now, when it comes to these investing apps, I like to have control in everything. So although it does round up to the nearest dollar, that might sound good to the average beginner, but I want to make sure I'm okay with that decision before the app automates that for me. But all in all, the app is good for beginners or those wanting a hands-off approach. Next up on the list, we have SoFi Invest. SoFi Invest offers commission-free trading, fractional shares, and automated investing options. It's a good option for both new and experienced investors who also want access to other financial products like loans and insurance. Definitely not in my territory, but I wanted to keep this on the list just in case I have a viewer that's into loans and insurance. Who knows? So that's all I have for this list. In summary, each app has its strengths, so consider what suits your investment style and goals best, especially if you're just getting started or looking to build a more comprehensive strategy. So for this next part, I'm gonna go ahead and provide my technical analysis for these financial assets so that you guys can have an idea on what I'm anticipating in terms of price movement for each and every one of these stocks. So starting with Apple, if we go ahead and go into the line, we can clearly see that price has been in an upward trajectory. Let's go ahead and go onto the daily time frame. So the first thing that I'm noticing is that price broke this all-time high at around 236.9 at the end of 2024 at around the first couple of, or the last couple of days of November. But we can see that price had a nice break. It didn't quite have a retest, but it had a nice push and continuation into this new range. If we go on the weekly time frame, we can also see that price is starting to exhaust and imbalance itself for that nice continuation. So most people would draw out this fib as a common retail tool to eye out that potential zone of entry. So at around 0.5 or between the 0.5 and 0.618 is where a lot of investors are anticipating price to have a nice continuation. So again, nearing that newly formed support, my prediction is that price is going to have a nice retest down to that area to have more room to have a nice bullish trajectory for the remainder of the year. Now, if we do have certain news, if we do have certain things that come out for Apple in a negative sense, maybe a product is bad, maybe a product isn't as efficient, maybe we have another economic crisis, Apple could potentially break through this level again. But because we had this previous break at this strong level, which price did hold for some time, I would wait for price to drop down at a more favorable or discounted price so that you can purchase more shares. Next up on the list, we have Microsoft. So again, let's go ahead and get the line real quick. I like to use this so that my eyes are much more comfortable with seeing what price is doing in terms of volume. But price has been in an upward trajectory. We can also see with this sideways trend line. Now, a lot of people would say this is a fake out, and we'll see in just a second. Let's go back to the candles. Okay, so yeah, let's go ahead and go on the daily time frame and analyze this market. So price is moving up. It's a bit choppy and it's not clear as a day. And a lot of people would actually box in price from this supply all the way down to this support like this. And I'm saying this support due to the previous price action. If we come over here, we can clearly see that price was rejecting off of this level. So that's why I have this ideal support down here. But most people will draw out this box waiting for price to have a breakout either to the upside or downside. Now, because price technically had a fake out and already grabbed these pending orders, aka liquidity, there's not a good chance that price is going to break to the downside because we didn't close right here. We also didn't close right here. So that's telling me that a lot of investors are pushing price up to initially have a breakout to the upside, taking out previous sellers, and eventually nearing this high at around 467.75. So this year, I'm anticipating Microsoft to have a nice push, eventually meet at this equal high, and eventually have a breakout to take out previous sellers and target 467. All right, next we have Tesla. Now, Tesla is a bit similar to Apple in terms of having a breakout and finding a pivotal point for that retest. But my only concern is finding that pivotal point, right? Because on the daily time frame, we don't really see that until we scale out on the weekly time frame. On the weekly time frame, we can clearly see that price has this nice push where most people will draw that fib from the top to bottom, waiting for price to hit that 0.5 level, in which it did. So this wick is a clear representation of when investors lose momentum, pushing out of that 0.5, 0.618 level to have a nice bullish continuation. And this is why top-down analysis is so important, because we see that price is wicking off of these levels. I mean, we can't really see that on the daily time frame, right? We get some of this right here. We don't really understand what's going on until we see this. Price is obviously losing bearish momentum. So in my opinion, it's a bit late to invest. I mean, you can wait for price to exhaust a bit more if you want, but I can see a lot of investors hopping in at this pivotal moment at the start of the year because price already hit the zone and now it's starting to push up. And this is the daily time frame. If you're not investing, then you probably missed out on a really good move today. But overall, I think this stock is going to continue to move up. And just like Apple, it's going to have a nice continuation up to this high and eventually have a nice break. Now, I don't really see a reason for price to have more room to push down because if we go ahead and scale out on the weekly time frame, notice how we have this swing high over here in which price is starting to react off of. So literally this week or whenever I post the video, honestly, we could see price have a nice bullish rally to the upside if it does decide to respect its new foundations of structure. Next up, we have Nvidia. So let's go ahead and go to the 4 hour. So Nvidia is looking a bit choppy. Let's go ahead and go on the daily time frame. On the weekly, I'm noticing that a lot of these assets are following the rules of trends. Same thing with these other ones that I analyzed. We have this nice bullish push in which price starts to fall back a little and then wick off of that 0.618 level. We also have confirmation that this is a strong level due to these past levels over here, in which price is fluctuating in and out of this level of resistance, soon turn into support, where we get a nice touch right here and another touch right here before we start to push up, giving confirmation that this is a strong zone that price is reacting off of. And just like Tesla, we could see a strong bullish trend if price decides to near 150 sometime this month and then have another break and retest, or in this case, a continuation. And last but not least, we have Amazon. So Amazon is a bit tricky because just like these other assets that I just analyzed, most of it is just common retail knowledge where we have a nice bullish push and then we have imbalance or price has to correct itself before it has a continuation in whatever market condition. In this example, we have this nice bullish push at around 205.17. Nice, healthy, bullish consecutive candles back to back where most would draw that fib from the bottom to the top, waiting for price to hit that golden zone or areas between the 0.5 and 0.618, but we never get that. We actually start retracing off of the 0.38. And this is kind of tricky, right? Because usually when it comes to this tool, we use the 0.38 level as a level of previous price. And if we look at previous price, we don't have any type of connection, right? If anything, price is simply telling us that it has more room to push down to provide investors more opportunity to enter in at a favorable or discounted price. So we'll just have to see. I mean, only time can tell, but I'm not as confident with this stock particularly because I'm not used to seeing price have a continuation without having a foundation of structure. So we'll just have to see and come back to it and analyze it once we get to that video again. I'll give like an update We'll just see. But this was my technical analysis on all of these stocks. If you guys have any questions, let me know. Quick announcements. This year in 2025, I'm going to be adding more content to my channel. So this being about stocks obviously is different from the other videos in relevance to investing, how to make money online in the digital markets, etc. I just want to be sure I'm spacing out my ideas for the average person that's trying to learn how to trade, learn stocks, learn how to invest their money the smart way. So hopefully this direction is a positive trajectory. You know, I just feel like there's so much room to teach online and I want to see what I'm able to do. So with that being said, I hope you guys enjoyed the video. Comment any questions you have and I'll be more than glad to answer them. But until then, I'll see you in the next video. Always remember, we're in for the long game, not the short game. Till next time, I'm out. Peace.